What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol GME for GameStop Corp. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, yes, this will, of course, be a bit of an update, but more importantly, quick disclaimer, this is not going to be a video saying GME is going to the moon, GME is going to 300, 500, 1,000, whatever your magical number is. This is going to be a video based on technical analysis and logic. So if you're on board with that, stick around, but if not, this might not be the video for you, okay? In terms of today's daily candle, don't get me wrong, certainly a large amount of range to be had here. If we take a look at the actual true range, so I'm going to hover my cursor here, you be on the lookout for this box right here. See how it says 1549? That's the actual range of today's session. So again, certainly plenty of opportunity in there for day trades, but let's look at how the candle actually closed, okay? So significant upper wick, that to me is indicating some selling pressure, and especially in comparison to the body, right? The wick is larger than the body, so technically I would call this an inverted hammer. In terms of where we closed, could we close above the blue line here, which is the daily 50 SMA? Absolutely not. No close back above that. And also note this level here at the 178.50-ish mark. Could we close above it? No, just below. I'm not saying it's, completely destroyed and we closed way underneath, but we couldn't close above from a technical standpoint, okay? So I'm not saying that GME can't continue forward here, but what I am saying is that the probabilities, and based on this structure here, it's not really favorable at this point in time, especially if we look at the 30-minute session, okay? So at first, certainly sustainable movement inside of GME. We'll come in from the low with the Fibonacci all the way up to the high. And again, this here, beautiful consolidation, but what happened into the end of the day? Obviously, we violate the 38.2. Even look at what happens with this little green dead cat bounce, right? It's baked in between these two red candles, could not get back above the 38.2. What do? We violate the 50, we violate the 61.8, and close underneath. So it's not to say that the chart's going to crumble here, but again, based on this pullback, it's a little too aggressive for me to advocate that it was healthy or it's sustainable and that we're likely going to see upside continuation. Again, don't get me wrong. Could it do something like this? Absolutely. Markets can do anything that they want. However, based on probabilities, based on what the structure is saying, it doesn't seem like a likely outcome at this point in time. If we continue to open tomorrow underneath the 61.8, close candles underneath it, I would watch out for a 100% retracement into the lows in here around your 173 whole dollar. Note also, if I clean up the fibs here, that puts us inside the midpoint of this overall choppy range in here. And again, I don't really think there's a trade to be had in there, noting that we've seen extensive chop. If we take out the lows of that range, notably at the 169 level, then look for lower in GME. I'm not saying it gets here all in one day, but really we're looking for, I would, maybe let's take it a little easy here. Let's go with 150 actually before saying we're all the way down to 146. Okay, so noting that this low in here could be a potential target. The green line here, the daily 200 SMA, stands a chance as a support point. However, there's really not a whole lot of candle structure here from this large breakout to the upside. So again, that's why we're looking lower underneath that 169 whole dollar. So that's what I think is a likely scenario here inside of GME. Again, I'm not saying it happens all in one day, but probably chop in this zone in here. Obviously, the flush point happens under this. And if we can get back above 178.41 on strong volume, I would say maybe there's a chance for a breakout up above the flag highs from today's session. But again, as the chart currently sits, I'm not seeing it as a likely scenario into the remainder of the week. You can keep an eye on it, and that's going to be at 186.75. After that, your target would be probably, let's see where this is coming from actually. Let's scrunch this chart up a bit. It's basically this level from in here. Not the most respected in here. I might make the argument, let's scrunch this up, see what we can find overhead that's a little bit more accurate. I would advise that we take this a little bit lower here. Oops, that's not what we want. We want to activate the drawing. There we go. I would look out for this, okay? That's at 195.33, noting that we had support, and then resistance in most recent history. Again, that is this trade right here, but as the chart currently sits, not seeing it as the most attractive option. That's going to wrap up the video here inside of GameStop. Again, if you appreciate the logic and the speaking in terms of absolute truths, what's happened on the chart and not, pure speculation, then let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.